After this week, the stock market looks very healthy, but is it too good to be true? With a nice upward move in the equity markets this past week, where do we go from here? Well, last night I was having a conversation with Tim, who's one of the guys I met through the Friends of Vanguard Facebook group, where we're both members. He asked me if we're in a bull market, and when I first glanced at the metrics, I told him, and I quote, "The metrics look fabulous this week." Well, after a thorough review of the metrics, they do look very healthy, but there's some behavior in the bottom dynamics that might show a weakness, but not enough of one where I'm worried. As you'll see when we look at how the markets performed this week, the indices finished up very nicely, as I indicated in my video last week when I said, this is looking very good for equities next week. So if I had to call it, I'd say we're going higher, at least early in the week, maybe even for the entire week. So how do things look for next week? Well, let's take a look. Okay, so as you can see here, the equity markets finished the week very nicely higher, with ARK Invest going up almost 11% for the week. This is fabulous. Followed by the NASDAQ 100 and Russell 2000, and then followed by the S&P and the Dow. This is a very healthy looking rally. How about over the past month? Well, a very, very similar picture. Great looking healthy rally over the last month. And then if we look at year to date, couldn't ask for more. This is absolutely spectacular. And what are the bottom dynamics telling us? Well, when I spoke with Tim, I said everything looked really, really good. Fabulous was the word I used. Because as we go through the rest of these metrics, you'll see they really couldn't look much better. But then I looked at the bottom dynamics, and you can see that while the market was going up last week, the confidence level was falling. The risk confidence level was falling. That's usually not a good sign. But now as I look at it again, this was falling here as the markets were going up. And then what happened on Friday? Well, the market pulled back a little bit, which corresponds with this falling risk confidence level. And the safety confidence was rising, which usually isn't that good for equities. But maybe we've seen what we're going to see. So I don't know what this is going to do going forward. I really can't call this one way or the other at this point. And what about risk versus opportunity? Well, if we take a look at risk versus opportunity, these metrics are all in a great place. The risk level, this red line, is in the mid to low 60s. I don't get concerned about this until it's above 80, not even close to that right now. Risk acceleration is in the mid 50s. Yeah, these are both pointing higher, but again, not at a level where I become concerned. I usually don't start to get concerned until I see this risk acceleration moving above 60. And then if we look at the opportunity level here, it's pointing higher and it's up near 80. This is a really, really healthy looking set of metrics right now. And what's the equity versus safety table telling us right now? Well, I can tell you that for many, many weeks going back, the NASDAQ 100 has been just fabulous. In first place, hasn't shifted at all. So this is really, really good. And what I really like this week is you can see that SPY and IWM, small caps, the S&P 500, and the Dow are all up here near the top. Now, gold has pushed its way up into the fourth position, but I like the fact that cash has moved down here. So this looks very, very good. Although over this time frame, it shows an unhealthy Treasury market with the highest risk Treasuries, EDV, and TLT ranked down here at the bottom. But if we look over a different time frame, you'll see that over the past week, these have had a nice rally. So maybe this will shift into a healthier situation next week. We'll have to wait and see. And what is the story with gold anyway? I mean, you can see how back here, gold was right at the bottom, dead last. And then over the last couple of weeks, it's been moving up higher. Well, my understanding is that there's some sort of Russian gold-backed currency that's in play right now. And that's causing people to say, hey, maybe the demand for gold's going to go up, so they're buying it. a tough one. Gold's not correlated to anything. So I reported on it out of interest here, but it's a tough one, and it's hard to invest in. And how does all of this show up in the buying and selling pressure? Well, if we look, you can see that the Dow had a very nice rally, although it's been kind of a little flatter as of late, but very nice rally last week. And you can see the buying pressure well above the selling pressure and heading higher. This is great. S&P 500, similar picture, very nice rally, actually a better rally than the Dow, and the buying pressure ahead of the selling pressure, which is good. NASDAQ 100, again, a very good rally over the last week, buying pressure above the selling pressure. And you can see ARK Invest, which has just been on a tear, has had a very nice rally, and the buying pressure is well above the selling pressure, even though the buying pressure is declining here. I still like what I see here. And if we look at small caps, again, very nice rally. And for quite a while, the buying pressure has been above the selling pressure. And you can see this gray line, the buying pressure is moving higher, while the orange line, the selling pressure is moving lower. This looks really, really good. Let's take a look at sector rankings, because this is sort of what I keyed off of when I said to Tim that everything looks fabulous. If we look at last week, this top table, you can see that things looked really, really good. We had Bitcoin, technology, semiconductors, consumer discretionary. We had cash down here, which is not great. I'd like to see it move even lower. But and treasuries were all down here, ARK Innovation up here. So this is a very healthy risk appetite. Now, if we fast forward to this week, this bottom table, you can see that we're sitting very much the same way. Consumer discretionary still up here. ARK is moving up very nicely, all the way from back here to up here. Cash has moved lower. This is good. Treasuries are staying put down here. You couldn't ask for a healthier looking table than this, except the fact that I'd like to see cash move even lower. But look, this is really, really good. And what about sector rank acceleration? Now, these tend to give you a much shorter duration view because they move more quickly. And you can see last week, if you look at this top table, we had gold up here in number 2 position, aerospace defense number 1, and cash was down here, treasuries down here, consumer discretionary way down here. So not horrible, but not great either. But then look at this week, the bottom table. You can see ARK Innovation right at the top. Gold is still here, but look at how consumer discretionary has moved from down here to up here. And I like the fact that cash has moved from up here to down here. Now, cash doesn't really move, it stays flat, but what you're seeing is how everything else is moving around cash, which gives you an indication of what's going on in the markets. And as I kind of mentioned earlier, if we look at how treasuries have performed, over the past week, we've had a very healthy rally in treasuries with EDV and TLT ranked number 1 and 2. This is a very healthy look here. But if we look back over the past month, they've been in not a very good place with an unhealthy looking situation here, where you've got the highest risk treasuries, longest duration, EDV right down here at the bottom, with TLT second to the bottom. This is an unhealthy looking treasury market. So that's why we're kind of getting mixed views depending on which metrics we look at and the time frame they look over. And then if we look year to date, you can see that we're right down here, not far off the bottom of long duration treasuries. So these could turn out to be a bargain going forward if they continue moving higher. And what about the inverted yield curve? Now, you've heard me complaining about this for weeks. It's just been a nightmare. I mean, you can see back here, we were inverted 110 basis points or 1.1%. Tried to recover here, but never even got close. Still 40 basis points inverted, minus 40 or minus 0.4%. And then we went right back to the bottom here to this huge inversion of the yield curve. And now more recently, it's started to try and recover a little bit here, but we've got a long way to go before this becomes uninverted. And I think the reason it's staying down here is because of the signals the Fed is giving. The Fed, Chairman Powell and the board members have been indicating they want more rate hikes. And you can see that here in the Fed rate monitoring tool, which uses futures trading to determine what the voting is, like what do investors think the Fed's going to do. And right now, almost 97% of investors think the Fed is going to raise another 0.25% or 25 basis points when they meet not very long from now on July 26th. So we'll see what happens. And then only about a 3% likelihood that the Fed keeps interest rates flat. So we'll see how this goes. And how does all of this show up in the buying and selling pressure? Well, if we look at shorter term treasuries, 1 to 3 years, you can see we've had a very nice rally here, even though they pulled back on Friday. And the buying pressure, the solid gray line, is moving higher and is above the selling pressure. This looks great. Same thing for intermediate treasuries. Nice rise here, and the buying pressure shooting up. What I call long to intermediate treasuries, 7 to 10 year treasuries. Again, nice move up in price and the buying pressure moving higher. And then long bonds, TLT, moving up very nicely and the buying pressure moving up, and it's well above the selling pressure. This looks great right now. And what about gold? Well, as I mentioned earlier, there's some drivers here around a Russian currency that's backed by gold that there's talk of in the news. And you can see the price has been moving higher for gold, and the selling pressure has been declining, and the buying pressure, the solid gray line, has been moving higher and is above the selling pressure. So this looks good so far. And then finally, what about Bitcoin? Well, Bitcoin, as you've heard me talk about, had a huge rally here when BlackRock and Fidelity announced that they're going to pursue Bitcoin ETFs. You can see that the buying pressure went off the chart and then pulled back, but the price didn't pull back. It continued higher, just in a more moderated fashion, and then it kind of declined a little bit here as the selling pressure took over. But you can see right now the buying pressure, selling pressure are about dead even, so no way to tell where this is going next week. This past week, the equity markets roared higher, and the Treasury markets also went up. What could be better than that? Let's see how the markets perform next week. But for now, as I told my friend Tim, the metrics look fabulous. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
This life feels like the sunny water. Wet my lips, but the sun is stronger. Pour it out if I'm being honest. It's just not everything you promise. Running down, drying out, what did you say? What did you say when I told you? Maybe this wrist wasn't gold-proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold, but it's lonely, yeah. This life feels like the sunny water.